Hello friends, I welcome all of you to joining me in this session. In this session we will discuss the topic import of goods or services under GST Act. So what is our today agenda? So it is I have mentioned in our next slide. So without wasting any time, let's start it. Today topic I have divided into 5 different sections. In first section we will discuss about the basic feature about the import of goods or services, as well as we will discuss about the definition of India, then few things more. Second topic will discuss about what is the high sea sale. We will discuss about, with the help of the one graphical representation, how the high sea sale can be made. Third topic we will discuss about the input credit tools related to import activities. What are the documentation is required, what is the rules has been defined in GST Act. Then there are some provisions we will discuss about the export special economic zone, electronic hardware technology park, then software technology park, business technology park, and UU. And rest we will discuss about the supply made outside the Indian frontier. Basically this is third country shipment related projects. Okay. Topic number 1. So first of all, normally what is the import? So import basically any purchase of goods from the person which is situated outside India, outside any country. Okay, suppose you have you bring some goods from the outside India, so it is an import of goods. But as per GST Act, which is defined the definition of import under section 2 subsection 10, which says that bringing any goods into India from the place outside India, it is a import of goods. One of the essential conditions is that the good must be past the custom frontier of India. Okay, every import, either it is a goods or a services, is treated as a supply of goods as a interstate commerce or a trade. Okay, in case of import of services, consideration is the one of the essential condition, means you receive something in exchange of goods or services, but it is not necessary that import of services is used in course of business or furtherance of business. It is not important. But there are two things are there in which the import of services are received either you paid a consideration for it or not. What are these two conditions? First condition is that the service received from the head office or a branch outside India is liable to GST under GST Act, and it is same, it is liable for IGST, because on import services, import or export of goods services, IGST Act rule follow. But in case of export oriented units, software technology park, electronic technology, hardware technology park, for this CGST, SGST, EGST may be applied. Second condition is service received from related person or any of the his units or other units which is situated outside India. In that case, GST would be paid by the units or a person who is situated in India. Okay, because the services, import of services are under the regulation of reverse charge mechanism. In short, we can say this is the RCM provision is applicable. In that case, the recipient of the services, recipient of the goods needs to pay the GST and claim the input credit in forthcoming months. Topic number 1.2, that is the second part of the introduction. So in first part we will discuss about what is the import, what is the definition of import, and what is the provision of import of services in case of consideration received, in case of without consideration. But here we will discuss about few more things. First of all, as we know that the service imported from the outside India is taxable under RCM, as I already discussed. So IGST payable by the recipient of services, because all the import of services, all the export of services are the provision which is defined under IGST Act. Then, but there is one exceptions in which recipient, means recipient of services who receive online information and data access retrieval services, is a non-taxable supply, because so IGST would not be charged on these supplies. Now there are two conditions also. Suppose third country shipment. So what is the third country shipment? So the movement of goods from one foreign country to other foreign countries. Such goods does not enter into India, means no entrance of ship in the custom frontier of India, but the tax invoice raised by the Indian party, which is a registered taxable person, under bill to ship to transactions. It is not considered as a supply of goods nor a services, which is defined under section or under paragraph 7a of the schedule 3rd, which says that any movement of goods from non-taxable territory to another place of non-taxable territory is neither a supply of goods nor a services. Okay, but in case when you are going to reverse any input credit or commerce services, so this supply of services would not be a part of your exempted supplies. This thing we have to need to remember. Then goods under custom bonded warehouse. Any goods which is stored into a custom bonded warehouse, it is not be liable for a IGST until it is clear for home consumption. Once it's clear for home consumption, yes, IGST would be payable. But there are some supply which is duty free supply which is stored for the purpose of the naval ship or ongoing ocean merchant ships. In that case, IGST would be liable, means these persons has to pay IGST on it. Okay, so these are the two basic these are the two things we study in these sessions. Topic number 1.22, definition of India. It is very important if you are dealing in the import or export business, because in India here define the what is the custom frontier of India. So definition of India is defined in Article 1 of the Constitution of India, in which it includes 5 different components. One is territorial water, seabed, subsoil, continental shelf, exclusive economic zone, or any other zone, means any other place which is defined under territorial water, continental shelf, exclusive economic zone and other maritime zone act 1976, or any space above it are also part of the definition of India. So what is the territorial water? Which is a 12 nautical miles from the baseline. Additional 12 nautical miles from the territorial water is continuous zones. 200 nautical miles from the baseline, it's a exclusive economic zones, and then after that is the high sea sail. So this is our definition of India. Topic number 2, concept of high sea sail. So high sea sail is very well known culture in import of goods. So basically what is high sea, as we are already discussed in our previous slide, but I will repeat again. High sea is a place which are beyond the 200 nautical miles from the baseline of the any particular company or country. High sea sales means any sale made by the consignee who is the first importer who made a contract to purchase the goods from the outside of the country, and it transfer such goods by way of transfer of title document of the goods. Okay, sale is made before goods enter the custom frontier of India. No GST would be paid at that time. Once the goods clear from the custom for the whole consumption, so IGST would be paid by the buyer. So this is the concept. So if we are graphical represented, we see, so good dispatch from the port situated outside India, it comes to Indian high sea level. Document of title of goods transferred by the consignee to the buyers. After that, goods enter into the Indian customs. Buyer clear the goods from the custom authority by paying the custom duty, and it also pay the IGST as well on the same thing. So this is our concept of high sea sale. It is very famous activity in import of goods. Topic number 3, input credit availability on import activities. So here the import activity means import of services, import of goods. So on what amount we have to charge the IGST? So IGST would be charged on the transaction value as well as the custom duty. Custom duty includes two components, basic custom duty plus social welfare cess. Importer to claim the credit, input credit of import activities, import credit on of IGST on import activities, it is mandatory that GST number should be mentioned on the bill of entries and give all the information of the alternative system which is provided by the GST authority, but as per the law it has to give information under GSTR 2. Okay. Then after submitting this information GSTR 2, custom electronic data interface system shall be validated such ITC on the goods imported by the buyer on to determine the taxable value of goods or services by way of using the rate of exchange defined by the RBI on the date when the date to impose the IGST is applicable on such goods. Okay, this is necessary. So here I give one example. Suppose your SSL value is 20,000 rupees, then you charge basic custom duty 10%, then you charge social welfare cess on custom duty 10%, so the total value before is IGST is 22,200. Then you charge 18% IGST on this 22,200 rupees, which is 3,996 rupees. Then the total custom duty would be 3,996 plus 2,000 rupees plus 200 rupees. Okay. Topic number 4, import of goods or services under the SCZ, STP, STP, BTP and EOU. So here we will discuss about the SCZ. So any services received, any supply of goods from the SCZ units is the import supply. So you have to pay the IGST accordingly. Then every SCZ unit or SCWR has to take separate registration other than the GST registration for the place of business. Okay. Any services, supply of services or a goods received by the SCZ is an imported supply and will be exempted from the GST. Okay. Any services, accommodation services provided by the hotel to the SCZ unit or a developer, it is considered as a zero rated supply, and it is invoice would be raised without charging any GST under the letter of undertaking by the hotels. Refund application can be filed by the supplier of goods or services if any supply made to the SCZ units. Okay. And most important, last point, if any service supply of services or a goods made by DTA to SCZ, means domestic tariff area, in same state, so EV will not be required. Okay, now topic number 4.1, it is basically related to electronic hardware technology park, export oriented unit, business technology park and software technology park. So normally any procurement of goods by the EAU shall be made under IGST, SGST, CGST. Okay, here I mention only IGST, but includes all things. Goods or services exported by the EAU unit is considered as zero rated supply. Okay. EAU can import goods without payment of custom duty, but IGST and cess is also exempt up to 31st March 2020. And this is defined amended notification which is applicable from the 25th March 2019. Okay. Domestic supplier, if supply any goods or services to the export oriented unit, so it will charge GST on it and the EO unit will get input credit accordingly. Input credit EOU unit transfer goods to another EOU by charging the GST. This GST may be IGST, CGST, SGST, okay, or UGST. Then before procurement of goods, following procedure needs to fulfill by the export oriented unit. So what are these? First of all, it has to inform to the development commissioner by submitting form A, in which it has to declare the detail of the goods and the detail of the suppliers. Okay. Then it has to endorse the tax invoice copy to the supplier as well as the supplier GST officer and his own jurisdictional GST officers. Record shall be maintained. So export oriented details shall maintain the detail of this supply of goods or services in form B, and same shall be submitted to their jurisdictional officers. So these are the procedure has to follow by the each export oriented unit. Now come to next point. Now topic number 5, supply made outside Indian frontier. So here, if suppose any any Indian party who deal in sale or purchase of goods, means who purchase goods from the outside of India and sell these goods to outside India, means good does not come into India. So in that case, he will liable to GST on which amount? On the commission he charged as an intermediary. But it is exempted now from 1st of October 2019. Okay. So what are the essential conditions? Sale and purchase made between the seller and the buyer outside India. Indian party charge commission on such sale and purchase. Okay. And it maintained the document for the 5 years. It is the one of the mandatory requirement of it. So what are these documents? So the documents are copy of bill of lading required, copy of executed contract between the parties. So here are parties are contract between the this Indian party and the supplier of goods, this Indian party and the receiver of goods. It is mandatory. Then copy of document to charge commission, because it is necessary, it should have evidence that the on what value the commission has been charged, because on this commission IG would be paid accordingly. Okay. Then it must have a copy of certificate of origin of the buyer, okay, where the goods is going. Then last document, declaration letter. This declaration letter should be prepared by the Indian party, okay, in which it will mention that what type of intermediate service is provided, but it is one of the essential condition that this declaration letter should be on his letterhead, okay, and a complete detail of it you have to give in. Friends, I hope you enjoy the session and you will also enhance your knowledge and it will help you in your profession also. So we will come back with the more interesting videos in forthcoming days. Till then, thank you so much. Goodbye and take care. Bye bye.